One of the biggest misconceptions about trading is that success comes from predicting the market. It doesn't. The market doesn't reward people who are right the most. It rewards people who manage risk the best. And see, this is the part of trading that people don't get. They think it's all about entries, somewhat about exits, not about money management. The money management is more important. You have to have an edge, but the money management allows you to harvest your edge. The money management is how you get your trades in alignment with your psychology, with your beliefs. Great traders don't predict better, they manage risk better. My name is Chuck Whitman, and I build great traders that lead great lives. Traders I've trained have generated in excess of $1 billion in trading revenue and are found at some of the biggest hedge funds and proprietary trading firms in the world. Great traders don't predict better, they manage risk better. One of the biggest misconceptions about trading is that success comes from predicting the market. It doesn't. The market doesn't reward people who are right the most. It rewards people who manage risk the best. Every year, there are only a handful of periods where enormous opportunities appear in the market, usually driving moments of extreme volatility and forced liquidation, like today. These moments often happen when panic selling accelerates, like yesterday and today, forced liquidation hits the market, like today, volatility spikes, like today, and sellers become exhausted. When the final wave of selling finishes, the market has to move higher to find new sellers. And that's often where the opportunity lives. But here's the key. Even when you see it clearly, you still have to manage the risk correctly. Today, I looked at everything that was going on in Iran and the Middle East, and I instantly knew that this was going to be a liquidation day. And on liquidation days, I told my team in our morning meeting, I said, look, what's going to happen today is every trend that's been working is going to reverse today, because what's going to happen is it's going to be a risk-off day. So the positions that people have been making money on, they're going to get chased out. So what did that mean? It meant that gold and precious metals, that's been one of the best trends in the last 6 months, especially this year. What happened? They reversed hard. And that's a classic example because with everything that's going on, what did gold do yesterday? It was up. It was up Friday. It was up yesterday. So if everything is intensifying, you would think that gold would what? It continue to go up. But when you get in these periods where hedge funds and traders and so forth, their margins get increased, they look at the risk, it goes too big, they have to sell. And so when they sell, sometimes they have things you can't sell, so you sell what you can sell. Sometimes you have too much risk on and it starts to reverse, then you have to sell it. And so the top trends, like precious metals, all of a sudden out of nowhere with no explanation get clobbered. Another one of the top trends was all of the foreign markets, the foreign ETFs. They got clobbered today. Another one of the top trends has been AI, specifically in like memory. So like Micron and SanDisk and Samsung, they've been on fire. Today, they got clobbered. And what's interesting is the things that have been getting clobbered in the last month, 6 weeks to this year, like cryptocurrencies, like Mag 7, where were they today? They weren't really down much. In some cases, they were up. So I told my team, I said, we're going to have a liquidation day. And I think the market could get clobbered. So sure enough, the market sold off, and I came in with a bias of getting short. Market opened severely oversold, but there was no response. There was no demand response at all, and the market actually continued to move lower. So we had a plan. It was unfolding like I thought. But then when we look at the market, I did a good job. You can see we had a gap down, and then the market broke the opening range, moving lower, and I did a good job of being really patient. And I caught this move right here. I got short, and the trade immediately was a winner. And it was immediately a 2-hour winner. And so I made a mistake. I broke my rules. One of the things I'm going to show you today is, yes, I break my rules. Yes, I have crappy days, and this is the case today. So I got short here really well. I immediately had 2R in hand, and I looked to get shorter. So I pyramided in right here. When I pyramided in, I broke one of my rules. And then immediately, well, not immediately, I actually had some money in this trade as well. I had a short that was working really well, 2.5R in hand. I had an additional short that had a half R in hand, and everything was looking good, pushing on the lows right here. But then the market reversed, and it stopped me out. And when it stopped me out, when it hit my risk point and stopped me out, I not only covered the pyramid trade, I covered the initial trade. So out of both trades, out of the pyramid for a 1R loss, out of the initial trade for like a 0.3R loss, 2.8R reversal. But I was smart enough to see that this was reversing very quickly, and so I shorted again. You can see when I shorted again, I caught this move, and the market sold off hard. Okay, so things are looking great, and I'm waiting for another place to get short. So here we big counter trend rally, and here we start to roll over off of volume. I get short again, and then very quickly I get stopped out. And this time I was smart. I didn't cover everything. I only covered the pyramid. So I hung in the rest of my trade, and it sold off again. But then it reversed hard and took me out. So here I came in with a plan of getting short with the market selling off. I executed that plan. I got follow through really on all 4 trades, but definitely for sure on 3 of them. 2 of them were excellent trades. I had 2 trades that were up at least 2R. One of the first trade, had I been still in it, would have been up about 3.5R. And when it was all said and done, I lost 3.6R across these 4 trades. What happened? Well, I told you I broke my rules, but where I really broke my rules was in money management. So risk management is more important than prediction. And why is it more important? Because risk management is what keeps you safe. Risk management is how you manage your psychology. Risk management is how you build into big winning trades. And so I violated one of my core money management rules, which is that when I got short up in here and this trade started to follow through, my rule is usually I don't add a second position until my first position's paid for. That way I only have 1R at risk in the market at any given time. And so here I had 1R at risk, and then I added. Now I had 2R at risk. And I wasn't able to meaningfully move my stop down. In some respects, you could say in my head I did, because that's why I covered over here. But the first trade was showing me no signs that it was in trouble. I didn't have a peel off yet, but I had no signs that it was in trouble, including this rally. And so by violating my money management rule, it got me immediately a 1R loss. Now, I said I did a good job getting short again. And then, of course, this one worked really well, too. It was over a 2R winner. It was approaching a 3R winner. Down in here, in fact, I was like a tick away from getting my 3R peel. Then it reversed. So what did I do? I broke my rules again and pyramided again. A lot about this setup actually looks quite good. But it didn't work, and it took out these highs and it stopped me out. So now I have another 1R loss on my pyramid ad, in addition to the 1R loss I initially had. Now I'm trying to be patient with the first trade, which had good follow through. But then when it started taking out these levels, it didn't take them out convincingly. So that's why we hung in. But then I stepped away. I did have a plan in place. I stepped away and we covered up above the original stop and original risk point up in here. So that trade was another R loser. So here we go. I want you to think about this. Has this happened to you? Where you have an idea, you have a prediction, a thesis, and it's totally coming true. And at the end of the day, you go back and look and say, I knew that was going to happen. And yet you're looking at a slew of losses. That's what I did today. Now, whenever I have this, I'm not upset. I didn't follow my rules, but I'm not upset because I knew this was a chance for me to adjust this and get it right. So I was reminded of my core logic. I should only ever have 1R at risk at any given point. As soon as that R is paid for, I can do another one, but not until. So had I just done the original trade here, well, of course, I wouldn't have had the pyramid and I wouldn't have had the 1 hour loss, but that actually drove me to cover the original trade. So without this trade, then I wouldn't have covered this. And of course, I wouldn't have gotten back in just fine. But my initial trade definitely got a 3R peel, in which my trade would have been risk-free. Then I would not have done this pyramid. And essentially, even if I got out over in here, this trade, the original trade would have been a small loss, averaged in with a 3R peel. It's basically like a 1 hour win, right? 1.5 hour win. So I could have had a 1.5 hour winning day, or I could have had a 3.6 hour losing day. This is a 5R swing on the same price action. And this is something that you see a lot, where you see a trader have good instincts, see what's happening correctly, and walk away with multiple losses. Why does this happen? Because our money management rules, their money management rules are broken. Our money management rules are so key because they give us the framework, they give us the guardrails in which we can play safely. Within here, we can do a lot of different things, but the money management guide rails, the position sizing guide rails keep us safe, allows us to maximize our ideas. And see, this is the part of trading that people don't get. They think it's all about entries, somewhat about exits, not about money management. They hear this, but they don't get it. The money management is more important. You have to have an edge, but the money management allows you to harvest your edge. The money management is how you get your trades in alignment with your psychology, with your beliefs. We need to trade congruent with our beliefs. And so if you're somebody who, for me, I have to be careful because I'll get aggressive. I'll get too aggressive like I did today, and I'll mess up some really great trades. These two entries in here, this entry and this entry, they were really, really good entries. The kind of thing I should be proud of, and I am proud of. But I messed them up by what else I did because I was not following my money management position sizing rules. So what I do in this case, by only having 1 hour at risk, I know it's the most I'll ever lose on an idea. But if I get it paid for, I can go a second time. I can go a third time. And when I get it right, I can have three units on, all of them paid for, and now I have a very large position working my way, never having more than an R at risk. That is asymmetry. That's how you get really big winners. So I can come in here and show you great trades, like several of them we've had this year. But sometimes you learn the most from your losses. Our losses are oftentimes an incredible blessing because they give us a great chance to learn. And rather than being emotional or pissed off or woe is me or a victim, no. We dig in and we look, what is the lesson that we get from these losses? And for me, that's quite simple. The lesson was the reminder that I don't get paid to predict. I get paid to manage risk. So there you have it. What day is it today? That's right, it's Tuesday. And it's not just any Tuesday, it's Trader Tip Tuesday, where I come to you every week with tips like this one this week, that great traders don't predict better, they manage risk better, to help you become a great trader who leads a great life. I'll see you next Tuesday.